Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Monday morning from our CNBC-TV18 News studios. I am Prashant. With me, my colleagues Reema and Nigel. Guys, hi, good morning.
Good morning.
Hi, good morning. You know, the first half of the year has been done, and we've all spoken so much about what a sparkling year it's been for the US markets, the Indian markets in the late dash, made it to the finishing line and pretty much came first. It just feels like, one exam is done and you've got another term coming up. And the question is, after this kind of a performance in the first half of the year in our exam, how will we perform next time? Expectations are high.
And the odds are against us. If you look at the last 10 years, 7 times the Nifty has gone up in the first half of the year. And the second half has not been able to match up to the first half. But going by the kind of pace we're seeing on the Nifty, I guess if it had to be a change, then maybe 2023
July
is here.
has some potentially market-moving events, right?
Yeah.
The earnings season in India, the earnings season in the United States. We will get clarity whether we are finally closer to the end of the US rate hiking cycle. So
there's a lot. Like, for example, I'll tell you, I remember I did a piece on the 1st of January this year. As we started the year, looking at what markets have done in pre-election years.
Okay.
Now, that is also against us. Pre-election years, markets usually are lower, not higher.
Yeah.
Depends, varies. I mean, the percentages vary. So, I mean, this is seasonality, history, but as they say, right, history does not have to repeat, but it does give us a general sense of, how it is rhyming.
Yeah, before we start talking about markets, for all those... all our viewers out there, happy Guru Purnima, because today is Guru Purnima, so, positive note.
And markets have been our biggest teacher,
Absolutely.
Right?
Markets have been the biggest teacher, as always.
Absolutely. Well, Nigel, let's kick this off with what we need to know. I mean, what markets are set up like. So, basically, last Friday, we ended on a very, very strong note. Super, super strong note. By the way, for the week, markets were up between 2 and 3%, depending on what index you were looking at. So there was no lack of momentum, right? Momentum is the name of the game, has been for the last, especially a few days or so, once we crossed that previous all-time high. I mean, from 900, which was the previous all-time high, round about there, to where we are now, which is 19,200, we've galloped, not risen. So the Nifty, by the way, is also closed above the medium-term resistance level. This is nothing but, I mean, if you join a straight line from the 2021 highs to the December 2022 highs, on Friday, we basically went above that level as well. So it puts us technically in a pretty good space. Technicians, chartists like all-time highs because it kind of lets them project because there is no real reference point then. You can project higher based on previous advances, but really blue skies in that sense. Global cues are supportive as well. So the S&P was up about 1.25%. The Nasdaq was up 1.5%. This is Friday's session, so there's no lack of pace in the US as well. The important data point was the US core PCE number, and that slowed down to about 0.315% advance month on month. But, I mean, you look at a plethora of what economists, global economists, etc., are saying. No one is really banking on this to say that maybe things are turning down. The previous couple of data points have all actually been very strong. So, it is what it is. We'll, I guess, get more data. For example, this week we'll get ISM manufacturing. On Friday, we get the jobs data and more. US 10-year yield, it was unchanged. I mean, it did not budge. 3.84. The dollar index came off a little bit, so just under 103 on Friday. By the way, there's a holiday in the US, so expect at least the start to be a little subdued. Tuesday is a holiday, so, many would be out for the kind of a long weekend. So price action out of the US later today and, of course, tomorrow, which is a holiday, will be slow. Just to come back and put levels to where we are and where we might be headed. On the Nifty, the upper end of the rising channel, because it's a rising channel, the levels also change, now stands at 19,315. We left off almost at 19,200, so that's about 100, 120 points out from here. That will be the near-term resistance for the market. So that's point number one. The very short term, I mean, very, very short term kind of supports, if you want to take a look at it. I don't usually talk about the 10-day, but because the 20-day is a little far out, the 10-day is at 18,835, the 20-day is at 18,738. These are short-term downside support levels to work with. Bank Nifty closed decisively above its previous high of 44,499, a level we've kind of spoken about for weeks in end, but it did finally happen in a conclusive way on Friday. In the near term, the next upside level for the Nifty Bank comes in at 45,645. So we'll see how long it takes for the Nifty Bank, because the Nifty Bank caught momentum much later after the Nifty once it kind of decisively, moved past the 20-day moving average. So, maybe there is a little bit more here on the Nifty Bank as compared to the Nifty. We'll see. Supports come in at the 20-day moving average of 43,965 and then the 40-day exponential moving average of 43,636. These are near-term, short-term support levels to watch out for. I just want to say one thing. We are also, by the way, now going to start talking about earnings, right, for the first quarter, April to June quarter. And first off the block will be IT services. And Rima, with IT services, over the weekend, we've seen so many downgrades, right? I mean, so many brokers pointing out that be prepared for lower earnings, etc., etc., etc. And that's a very important 30-35% constituent of the Nifty. So if that part of the market starts to lag a little bit, I mean, that perhaps slows down what happens on the index as well.
Yes, expectations are that Q1 and Q2 will be very, very muted for the Indian IT companies, and we could see some downgrades for the first half when it comes to the large cap IT names. But just a quick update. By the way, US markets are trading half day today also. So they're shut tomorrow for Independence Day, but today they are trading half day. A quick recap of how the US markets fared in the first half of the year. The S&P 500 popped nearly 16%, its best first half since 2019. The Nasdaq surging 32%, its best first half since 1983. The gains in the Dow Jones were fairly modest. The rally in Nasdaq was led by those magnificent 7 technology names, the mega cap tech names. And just look at those returns year to date. Meta is up 150%. Nvidia is up 200% on that. Tesla is up 150%. Even the others like Apple, where there is a modest gain of 55%, still managed to cross the $3 trillion market capitalization. Asia this morning is very, very solid. Japanese markets are at the session high. You've got more than 1% rally on Japan, Hong Kong and the Taiwanese markets. The gift Nifty, right now at least, is trading a bit flat, just up close to about 15 odd points. That said, as Prashant pointed out, we have closed last week on a high note with the key indices gaining close to about 3%. And look at the inflows by the FIs and the DIIs. On Friday, the FIs and DIIs combined put in 7,500 crore rupees. And remember, the FIIs on Thursday had put in close to about 12,000 crore rupees, which means in a span of 2 days, FIs on Thursday and Friday have pumped in nearly 20,000 crore rupees. But these are the numbers by the FIs in the month of May and June. 28,000 crores of inflows, and that's been the big driver of the Indian market rally.
Well, that's right, Rima. And just take a look at the momentum that the Nifty has. The last day of the past series was very, very good, and the first day of the new series as well was splendid. So the Nifty has got the momentum, and this time around, some of those economy-facing stocks you like if they do well, cement, autos, but they don't account for a big chunk on the index. Now the Nifty Bank has come to the party, and that's what's driving the Nifty higher. In the last week itself, after a few weeks actually, you had the Nifty Bank that performed as well as the Nifty, which is rather good news. 2.5% gains on both the Nifty as well as the Nifty Bank. And the FI as well, they're not just showing us the money in the cash market. In the FNO market as well, the index futures, big open interest build up. You had the long positions that were up close to 17,000 contracts. Now they're nearly around 70% long, 69 to around 31%. That's the ratio that comes up for you. As I always say, I like some shorts in the system, but for the time being, that's working for the bulls. On the option side, well, they bought more puts than calls, but the good side is that, in fact, they continue to write puts as well, rather aggressively. So on the Nifty, well, the 19,100 put, 19,000 put between them, close to 1.5 crore shares getting added out there. So big open interest built up, and there was aggressive writing being seen out there. Even the Nifty Bank, that one had a very big surge, the 44,500 put, close to 40 lakh shares getting added there, and the premiums around 155 rupees. So going by the writing we have seen at around that 19,000 put and around the 44,500 put, well, you deduct the premiums of them, you get the first support. The support level of around 18,970 on the Nifty Bank, 44,350 approximately. If we break that level, then we move to around the 20 DMA. The only problem for me is the PCR has now moved to elevated levels, and it's getting a little bit stretched on the upside. Remember, the broad range has been around 0.7 to around 1.4, 1.45 odd. Now we're close to around 1.6. What that's indicating is that put writing is getting very, very easy. But going with the kind of momentum we have on the index, you need to stay long on the index. I've given you the support levels as well. Maybe we could see some bit of consolidation, but you need to stay long on the index with those stop losses in place. Got the momentum on the upside. Let's see if we can continue to trend higher.
And momentum can do pretty crazy things,
Absolutely.
Nigel. So, but of course, I mean, be mindful of the fact that you are in a very strong momentum kind of market. So you need to be watchful. Trading, of course, especially, you need to be watchful. Well, before we go any further, let's quickly tell you what is lined up in the first half hour of the show. We'll get you updates from markets around the globe. Ed Yardini of Yardini Research will join us to discuss the global setup. Our research team will get you CNBC-TV18's list of top 10 stocks for the day. And at 8:30, we'll do a quick fundamental stock check with our market expert, Prakash Diwan. So that's the lineup.
On equities, Venugopal Gare of Bernstein says Indian equity markets have risen 13.2% since the bottom in March, with India among the best performing emerging markets. He says while overall we sit at high valuations, picking stocks and sectors with good earnings and ones that are yet to pick up, like financials, will be recommended as capital moves across sectors and stocks. Venugopal adds even laggards such as IT, despite the weak near term, may also catch up on expectation of new levers such as AI.
Okay, let's get you some money market views now. On the rupee, Samiran Chakrabarti of Citi says persistent favorable inflation differential and the need to manage surging rupee liquidity can prompt the RBI to allow a break of the current range towards appreciation, while balance of payment worries and a sudden change in hedging behavior can force the opposite move. Their view of the rupee at 82 a dollar in 9 to 12 months is predicated more on weak dollar view and implicitly builds in RBI's bias for stability.
On the bonds, Ajay Magnolia of JM Financial says despite moderating inflation, the future trajectory of terminal policy rates for major central banks remains uncertain, keeping traders cautious. The trend of domestic yields hardening continues, while weak demand at auctions for higher cutoff shows a cautious approach. He expects the bond market to stay firm today in the absence of any domestic cues and US yields remaining elevated on Friday. The 10-year benchmark yield is expected to trade in a range of 7.09 to 7.14% for the day.
Well, we have a lot of stock-specific action to track for you. Get to that in just a wee bit from now in our special Top 10 segment. But let's run you through the list first. Reliance Industries, Gujarat Gas, Ultratech Cement, Vedanta, L&T Finance, Granules. You have Mastercard Dock and NCC. All those in the back of positive news flow. While IPCA is the only stock that could be reacting to negative news flow over the weekend, while auto stocks, they could see a mixed reaction.
Okay, well, Ed Yardini is now joining us, President at Yardini Research. Ed, good morning. Good to have you with us here. Thank you very much for your time. You know, the weakness in the US data is not showing up. I mean, the core PCE perhaps is one of the many which kind of showed some amount of weakness, softness, but otherwise it's been pretty strong and steady. What does it mean, Ed? I mean, once again, markets have been pricing in hikes in July by the Fed. This week, we've got some data points lined up out of the U.S. So we get a July hike and then what? More? But the market seems completely unconcerned. Ed, you'll have to unmute yourself.
Ms. Yardni, you'll have to unmute yourself, sir. We would like to hear what you have to say. All right. Ms. Yardni, are we audible? Nope. All right.
Okay.
I think we'll just fix that.
Ed, can you hear us? Okay, I think we'll just... okay, I think he is with us. Okay, I think we'll just have him back in just a bit from now. Some technical issues coming up. Let's just quickly take a look at what age... Yeah, Ed, we can hear you. Go on. Sorry, you were on mute,
okay,
but now we can hear you. Go on.
Okay, and you can see me as well, right?
See you and hear you.
Good. All right. I don't know what happened to the microphone, but anyways,
no problem.
Good to be back. Good to be back with you. Look, I think investors have come around to appreciate that the economy is remarkably resilient, and it's withstood a 500 basis point increase in the federal funds rate. So I think investors are getting kind of confident that even if the Fed does another 50 basis points, that's not going to be a problem for the economy. Meanwhile, we are seeing quite a bit of improvement in the headline inflation. As you point out, the core inflation is still quite sticky, but quite a bit of that is rent. We know that rent inflation is going to continue to come down. Meanwhile, there's liquidity in the economy. enough to keep the stock market moving higher. I hope it doesn't go into a melt-up situation. I hope that we kind of rest this summer and then move higher later in the year. But I don't run the market's playbook. The market has a mind of its own, clearly.
Ed, morning. This is Rima here. How does India stand in the emerging market basket? Investors bet on China at the beginning of the year on hopes of reopening, and money moved away from India into China. But that turned in the middle of, sometime in February and March, once investors realized that the promise of China growth reopening isn't materializing to the expectation, as according to the expectations, and money once again moved back into India, and FIs have been lapping up India. How does India stand in the mind of foreign investors, and how does it compare with the emerging markets?
Well, I think you're right. A lot of investors clearly are looking at China and India as alternative ways to invest in emerging markets in terms of having very large economies, large populations, and very industrious people. And you're absolutely correct that once China eliminated its lockdowns, there was widespread expectation that China would really show a very strong economic growth. But I think what has been revealed is that the underlying weakness in the Chinese economy is very much related to the property market. They've had a property bubble that's burst, and I don't think there's much they can do to turn that around. And that's been an important source of economic growth over in China. Do you know that imports in China have been flat for like over a year now? That's a very telling indicator, I think, that domestic consumers just aren't responding to the end of the pandemics with the kind of enthusiastic buying binge that we saw in other parts of the world, particularly in the United States. So compared to all that, India looks quite good, and especially in a geopolitical context where there's increasing concerns about doing business in China, manufacturing in China, because of the geopolitical concerns. And as we just saw with Prime Minister Modi visiting the United States is reaching out to India and would like to partner more with India and less with China.
All right. Hi, Mr. Yardney. Good morning. Nigel on this side. A couple of questions. You said that we could possibly get a couple of more rate hikes. What are you factoring in? How many more hikes in this year? And by when do we get the first signs of a cut from the Fed? Because the equity markets, they want that. Some said at the end of 2023, but it's more likely now in 2024, going by the commentary that we're getting out from the Fed.
Look, I think we have to be flexible and open-minded here on what the Fed policy is going to do. And we do have to listen to the Fed. There's an old adage, don't fight the Fed. And if Fed officials are telling us that they believe that inflation is still too high relative to their 2% inflation target, and that the Fed funds rate isn't restrictive enough to bring inflation down to 2%, and that they will believe that they need to do another 50 basis points between now and year-end, or even the next two meetings, then we have to take that at face value as the most likely scenario. In my opinion, the economy's resilience doesn't suggest that inflation can't come down on its own. I think a lot of the inflation was related to the shock and the aftershocks of the pandemic. As the pandemic is abating, I think we've seen inflation come down dramatically in goods markets, and it's in services that we are seeing persistence. But I think that will change as well. But I have to factor in that they're going to do another 50 basis points because they're quite adamant about it.
Maybe, I mean, actually, on the flip side, once they start to cut, maybe the market will not like that, right? Because the cut will finally come when the economy starts to weaken. I mean, they're just happy. I mean, 500 basis points and the market is doing just absolutely fine. Red?
Well, there's a lot of moving parts here. We know that there's a lot of enthusiasm about artificial intelligence, and that's been a big source of strength for the technology sector. We also have a tremendous amount of spending going on by the government in infrastructure spending and on incentives for onshoring to bring manufacturing back to the United States. So industrials have done extremely well. And now we're finding out that the financials are doing well because after they got hit quite hard back in March, I think there's a growing sense that we're not going to have an economy-wide banking crisis. And as you know, last week, the Fed reported its latest stress test of the banks, and the banks passed the stress test. However, it was the 23 largest banks. It wasn't the 4,000 small banks that still have a lot of exposure to the commercial real estate market.
But at least the 23 large big banks passed the stress in light of what we had to face in February and March with the collapse of 3 regional banks. Ed, thank you very much for joining in. Need to get into a very short break. There are lots of individual stocks that you need to track in today's trade. Our list of top stocks is lined up next. Welcome back. Our research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, let's go across to Sonal to learn more about Reliance Industries and Gujarat Gas. Sonal.
Good morning, Rima. Let's start with Reliance Industries because the third cluster of their KG Basin gas production block has started commercial production, which is the MJ field. And with this, they've completed the production commercialization across all the 3 blocks. The 3 clusters are expected to meet 15% of India's gas demand, and peak gas production from all these 3 clusters is expected to be at 30 MMSCMD. Now, remember, Reliance Industries, it is the operator of KG D6 Basin, where they have 66.67% participating interest, and BP holds around 33.3% participating interest here. This was the next trigger for the oil and gas business, and that has come through, so that is a positive here. For Gujarat Gas as well, there is a positive news because the government has gone ahead. They've increased the import duty on imported commercial use LPG from 2.75% to 19.25%. This is from 1st of July. Now remember, propane prices, they were going down, and it is a competition for Gujarat Gas's product. Now with this increase in import duty, the propane price will need to be hiked by 5 to 6 rupees per SCM, and this will offset the disadvantage that was coming in for Gujarat Gas. Now remember, propane prices were around 32 to 33 rupees per SCM. This is before the import duty hike, and Gujarat Gas at 38.6 rupees per SCM. That's why there was lower demand for Gujarat Gas's product, but now with this hike in import duty, this will be positive for Gujarat Gas, and that's why it will be in focus today.
Thank you very much for that. Over the weekend, we had a trickle of many of these auto sales numbers for the month of June. We're still awaiting numbers from Bajaj Auto. We don't have numbers from M&M, Ashok Leyland yet. TVS Motors too hasn't reported its June monthly sales data. But let me run you through the ones which have come out. On the miss side, you've got Maruti. Maruti's total sales went up by just 2% on a year-on-year basis, but this is lower than Nomura's estimate of 8%. So that's a miss. The reason for the miss is that their lower-end segment, the compact segment, which is Baleno, Celerio, Desire, Ignis, Swift, Wagoner, they constitute about 40% of their overall sales, and that has seen a decline of 17%. So the lower end, the cheaper variety of the cars for Maruti is hurting. Let me move on to Hero MotoCorp. Now, Hero MotoCorp's total sales have fallen by 10% on a year-on-year basis. It's come in at 4.37 lakh units. And again, this is a miss because Nomura was anticipating an improvement of 3%. On the flip side, Royal Enfield, that's owned by Aish Motors, has had a solid June month with a growth of close to about 26%. For Tata Motors, their passenger vehicle segment is doing pretty well. Their passenger vehicle is, dominated by their SUVs and even their electric vehicle segment. So the electric vehicle has posted its highest ever quarterly sales in Q1, and it's doubled compared to the Q1 of last year. So SUV, EV for Tata Motors is doing very well, but the CV business for Tata Motors is a bit subdued because their sales have fallen by nearly 8% year on year.
All right, Rima, I'm watching out for two stocks, Vedanta as well as Ultratech Cement. Let's start off with Ultratech Cement. Brilliant numbers coming in for the first quarter of this year. Well, on such a large base, they're growing by close to around 20%. That's the total consolidated sales volumes. And the bigger focus would be on the grey cement volumes. That as well has grown by close to around 20%. So those numbers look very, very good. Capacity utilization levels at 90% on a larger base. That's encouraging as well. So they've clearly gained market share. We'll have to see at the cost of who. But these numbers look very, very good. So Ultratech Cement gets a thumbs up. Next up, Vedanta. They're considering and they have approved strategic review of their steel business. Now, with the steel business, it will include their steel, it will include their iron ore as well as the Facor business. They're saying that they're looking at, at maximizing shareholder value, and it could include a potential sale of this business as well. To give you a few specifications on this business, it's a 1.5 million ton unit. That's a steel business. They're looking at upping it to around 3 million tons. The total capex that laid out is around 3,500 crores. They've spent close to 1,000 crores, 2,600 crores yet needs to be spent. In the past year, all these three businesses together, that's the ferroalloys, the iron ore as well as the steel business together, they contributed less than 4% of the total EBITDA. And also the net debt is close to around 2,000 crores from this business. Expect the stock to open up in the green, but we'll have to see what the management does from here. Abhishek joins us though to tell us about L&T Finance. Abhishek?
Well, Nigel, there is a management change over there. So current MD and CEO, Mr. Dinanath Dubhashi, will superannuate on 30th April 2024. So Dubhashi will act as, the special advisor to chairman of the board during this period. That is from now to up to April. Sudipta Roy to take over as the company as the MD and CEO with effect from 24th January 2024. So Roy is currently serving as group head at ICICI Bank for the unsecured assets, cards, payment solution, consumer finance, etc. So under Mr. Dubhashi's from 22nd July 2016, that is when he took over till now, the quarterly ROE has moved from 9.78% to about 9.37%, and AUM has seen a total growth of 39.5% in last 28 quarters. Back to you.
Okay, well, that's going to be perhaps one of the stocks of the day as we start today's session, L&T Finance. Abhishek, thanks very much for that. Vivek is now joining in with more stocks with news flow. Vivek, hi, morning.
Well, good morning. Quite a few stocks on the radar on the back of news flow that's come in over the weekend. First on our list, Ipca Labs. The regulatory concerns over here continue. CNBC got access to the Form 483 issued to the Pithampur unit. Remember, from June 15 to June 23, the US FDA conducted an inspection over there and issued 8 observations. And, some of these observations are quite serious. Key among them being, US FDA notes that the company failed to review discrepancy in batch distribution. So, remember, Ipca Labs is already under the regulatory scanner for 3 of its plants, and at this point of time, looking at the Form 483, it doesn't look like the regulatory woes, could lift soon. Also, watch out for Granules. Some positive news flow coming in after, Friday's news flow, where you actually saw some amount of revenue as well as the profit warning that the company gave. But, some positive news flow from the US FDA side. The company has successfully completed the pre-approval inspection as well as the good manufacturing practice inspection for the Visakhapatnam plant. Watch out for Mazgaon Dock as well. The company has signed a contract with the Indian Navy for a submarine with the total value of the the contract being 2,724 crore. Lastly, NCC, the company gave its quarterly update for the month of June, and the company has received new orders worth over 2,000 crores, building division around 1,300 crore, electrical division from 720 crore. Some positive news flow for NCC.
Thanks a lot for that, Vivek. Well, let's do a quick recap of all the top stocks we discussed. Few stocks with positive news flow include Reliance, Gujarat Gas, Ultratech, Vedanta, L&T Finance, Granules, Marscount Dock, and NCC. Well, stocks with negative news flow are just Ipca Laboratories, while auto stocks, they could see a mixed reaction.
Okay, the SGX Nifty has now transitioned to the GIFT Nifty index. All futures trading on the SGX Nifty will be routed through the GIFT Nifty. Yash is now joining in from Gandhinagar to tell us more about the new index and what it could mean for investors. Yash.
Well, that's correct. It's finally time to say goodbye to SGX Nifty and say hello to GIFT Nifty. But is it just the name that changes? Absolutely not. That's because starting today, all the trades on the futures, Nifty futures, which were taking place on SGX Nifty in Singapore, will now be routed to NSE IFSC Center here in Gandhinagar, GIFT City of Gandhinagar in Gujarat. Also, not just that, the settlement and the matching of those trades will also happen here in the NSE IFSC under SGX India Connect IFSC or SGX ICI. As you can see on the screen behind me, the matching of trades and the settlement is ongoing as we speak right now. As far as the exchange itself is concerned, 21 hours of trading time each day, 2 shifts as far as trading time is concerned. The first one between 6:30 a.m. to 3:40 p.m. Indian Standard Time, and the second one between 5 p.m. to 2:45 a.m. What does this transition entail? $9.5 billion of outstanding open interest moves into GIFT Nifty today, and the management in an interview told CNBC-TV18 that they expect 1.5 to 2 billion US dollar of average traded volume on GIFT Nifty. As far as the products itself is concerned, in the first tranche, there would be 4 products which would trade as far as GIFT Nifty series is concerned. The first one is GIFT Nifty 50, GIFT Bank Nifty, GIFT Nifty IT, and GIFT Fin Nifty. Finally, the most important part, who can trade and who cannot trade. As far as resident Indian traders are concerned, they won't have access to GIFT Nifty. But importantly, Indian brokers and their subsidiaries can sign up funds through non-resident Indians, family-owned offices, and wealthy Indians as clients. Apart from running proprietary trades, they can also trade client-based trades for these clients which these funds would have.
Right, Yash, thanks very much for that. So, I mean, if you're basically trading the GIFT Nifty, you need to be registered as a separate entity, and the target audience, of course, is it remains the same as SGX Nifty. Of course, they'll try and add on a lot more clients, but the fact is, it's not for retail. I mean, if that's what you're wondering. It is for largely institutional investors, but large prop traders, etc. as well, but have to be registered separately at the GIFT Nifty at NSE International Exchange. We'll take a quick commercial break here. More on that later. We'll come back and Prakash Diwan will be joining in with a quick fundamental stock check. Later, we'll also connect with the management of Shriram Finance. Morgan, by the way, has come up with a very positive note on the company. We'll also talk to Shriram about their tie-up with Paytm to boost their digital loan distribution business. Stay tuned. Those 2 conversations up next.
Welcome back. Hope you're having a good morning and a good start to the week. The GIFT Nifty is suggesting some green to kickstart trade. Let's see how that goes. With plenty of stocks to discuss. And to help us out with that, we have market expert Prakash Diwan, who joins us on the show. Hi, Prakash. Good morning. Thanks so much for joining in. Well, Prakash, let's analyze some of the stocks that will be reacting today. From the cement pack, Ultratech Cement on such a large base, they're growing at 20%, which is phenomenal. Higher capacity, good demand on ground, particularly from non-trade, I understand, has helped them. How would you view the stock from here on? Valuation-wise, I mean, for the big daddy, it's still relatively cheaper than some of its peers. And also, who would you be negative on? Because clearly they've gained market share.
Oh, absolutely, Nigel. I mean, the kind of capacity utilization that we've heard from them, 90%, and that one an augmented capacity is commendable. And it also tells you that, the industry is not seeing any kind of a slowdown or any kind of a demand contraction, which was anticipated. In fact, what's happening is that the fact that the larger players are growing at such a, even clip tells you that there is enough absorption in the market. It's just a matter of, at what level do the prices start kind of reflecting all of this. So when that happens, you'll probably have even the mid-sized players starting to benefit. Anybody between that 10 to 25 MT is probably, the next phase of growth. You would have to look at some of the winners there. But I think there's also a little bit of a catch-up that Ultratech has done in terms of market share. If you look at the numbers from the ground, very clearly they've been able to expand into some of the geographies which they were not very dominant in. And that's probably thanks to an Ambuja or a Sri blinking for other reasons than market dynamics. So there is a little bit of a shift in the top tier players. But the mid-sized names continue to still offer a lot of salience. And as and when the demand continues to be well established post the monsoon, which is, anticipated. And if we have a timely monsoon, it only becomes much more closer, So I think it's a sector that's probably likely to get re-looked at by most investors. And all those doubts that we had seen in terms of, raw material impact on some of these players will probably get nullified. So I'm quite positive. I've been positive on most of these names, but one more reason to kind of get some conviction built up. Yeah.
Prakash, hi, good morning. The IT index was up 2.5%, I think, just last Friday. It was a big day. Over the weekend, we've seen many brokers, sell-side brokers, coming out with cautious commentary, basically trying to get the street to say that, well, this is going to be a quiet quarter. It's going to be a muted quarter, almost. What do you think? I mean, you think it's already in the price, or we will get a dip which will get bought in? Because it's well understood that Q1 is going to be weak. But we got, some of these guys, some of these notes out over the weekend. What's your sense?
Good morning, Prashant. So, I think the behavior of most IT names on the market has been more reflective of the caution that came through in the March earnings calls, and led by the likes of Infosys and all of that. So, you had an Infosys moving all the way from 1,500 to closer to 1,200 zones just because, the commentary was tepid. But this quarter, the expectations have been so muted that even if they have a normal quarter, which is usually soft, and the commentary starts turning positive, there could be a race to buy into IT again. And remember, we've got banks and IT as the two large pillars of the Nifty, up move. And banks have already kind of done their bit in terms of starting to move. I think this quarter will probably tell us that companies which have gone beyond just the conventional business models and have started seeing revenue streams build up from other new age streams, if I will. It's like what's happening in the NASDAQ and in the US. It's more AI, more ML that's contributing to this up move. So there is a sense of, very clear sense of, transition that's happening. So what happened with digitization 2 years back could probably happen with AI in probably not this quarter, but in the subsequent quarters this year. So there will be a positivity that will come back because the prices are telling you that it's like, end of the world for IT in that sense. Nothing's going to happen. US is in a recession. But if they were to come up with a commentary and patches where there is improvement, I think the market will probably want to add more. So that's where the setup is positive. We just need to wait probably later this week once the numbers start pouring in, how things look positive. I'm quite positive on the mid-sized names as well. So you have a smattering of smaller names which have done well because of the niche that they've been able to establish themselves in, and those are the ones that probably start bouncing back faster.
Prakash, do stay on. We've got a lot more questions to ask you about auto sales, the oil and gas companies, where there is some news. But we've got a corporate waiting by, Shriram Finance. Now, Shriram Finance was up 2% on Friday. It rallied 24% in June, even as very large blocks from Piramal Enterprises TPG, which totaled more than 10%, got absorbed by the market. This morning, Morgan Stanley has further raised the target price on Shriram Finance to 2,200 rupees, which means from the current levels of 1735, we're looking at an upside of more than 25%. And they say the stock supply was well absorbed, contrary to fears. Separately, the company has also tied up with Paytm to boost their digital loan distribution business. This tie-up is aimed to tap the potential underbanked segment. Umesh Revankar, the Executive Vice Chairman at Shriram Finance, is here with us on the show now. Thank you very much, sir, for joining in. This is Rima here. First, if you could give us an overview of the demand on the ground, particularly in terms of CV financing. Tata Motors reported their June monthly sales numbers. The CV monthly sales are down 8%. How is demand on the ground? And if you could give us some numbers. I think your guidance is for a 10% growth for this year. But could you beat it, do better? Just some colors and number.
Yeah, good morning. See, what we see in CV is last year the growth was, especially in heavy commercial vehicle, the growth was above 40% year on year. This year, it is not grown year on year, but still there is a small growth of around 5 to 7% for the full quarter. And I believe post the monsoon, the demand will pick up because the construction activity normally picks up post the monsoon after September. So the major demand that is coming for CV is because of the huge infrastructure projects and the government spend. So that will be reflected in the second half of the year. Overall, I believe there will be a double-digit growth for the commercial vehicle. By and large, the demand is good. The vehicle prices have gone up a little bit because of the implementation of the Bharat Stage 6 to 2.0. And therefore, people have postponed buying the vehicle a bit. So I think that is the reason. But post the second half of the year, the demand should come back if the everything goes well, like having good monsoon, infrastructure being good. I think the demand will be back. So I think the resale values have improved significantly because of the price going up in the new vehicle. More demand has come for used vehicle. So I feel the demand is good and we should be able to grow double digit very comfortably in CV financing.
All right. Hi, good morning, Mr. Revankar. This Morgan Stanley note that we're talking about, they're estimating that your AUM grows by around 15% for the next 3 years. That is still FY26. And also, they are plugging in a NIMS number of around 9.7%. You're on board for both these two numbers? Very gettable?
Given the guidance of 15% in the last year while announcing the merger, and we are standing by it. And I believe the demand and scope for the credit is very good. Especially, we are also expanding our business loan franchise, which was mostly in the south before the merger of Shriram City, and now across the country. So we are going to grow a little faster in the SME lending. Plus, of course, the small business loan also we want to extend across the country. So there will be a growth, 15% growth. And since the small ticket loans comes with higher margins, higher lending rates, we should be able to maintain good net interest margins.
Of around 9.5 to 10%, gettable?
I can't comment on that now because right now our net interest margins are hovering between 8.3 to 8.5. But the calculation varies from the analyst to analyst. It could be we have to see what they have calculated.
And it'll depend on the mix as well. Mr. Revankar, so we just wanted to get the broad numbers out of the way, but the recent news has been the tie-up with Paytm. Tell us, as a percentage of your total customer base, how many of them are digital linked? If you could break that up for us, because we want to understand how big the opportunity is in terms of this tie-up.
See, I can give broad numbers. Initially, we had 80% of our customer paying in cash. Today, the only 20-25% of them pay in cash. Around 80-85% have migrated to digital or the banking mode. That is the kind of shift we have in the last 7-8 years. So I believe there are so many events that triggered it. That demonetization plus the COVID, that triggered many of them to move on to a digital platform. And we also were every time we were there when the turn happened, and we had all products ready for a digital transition. So this again, we are taking it further up by tying up with Paytm.
Got that. Mr. Revankar, just to go back to the basic fundamental issue, right, which is the cost of commercial vehicles. There was another news report recently where I think, Mr. Gadkari was talking about having the driver sort of part of the truck having air conditioning and how that will increase the cost of trucks, etc. I mean, we've heard it from other CV financiers as well that is perhaps the single biggest sort of, in a way, impediment to growth. Would you agree with it? And do you think incomes are rising fast enough to support the growth, or you think it'll be a challenge?
No, I really don't agree with this view, because what we have to understand is providing an air condition. Most of the large trucks today, all of them have an air conditioned cabin. It is not that they don't have. So the only thing is the smaller truck like LCVs may not have the air conditioning. So maybe Gadkari is talking about long-haul trucks only. So most of them have the provisioning of air conditioning. Maybe it will cost around 30,000-40,000 rupees more per unit. I don't really think it will be expensive. So I see one thing, what most important thing is there will be less driver fatigue and he will be able to drive more. So his productivity will go up. If the productivity goes up by 15-20% of each of the operator, then definitely what you bring on the table is much higher. Your revenue per vehicle per day will increase by 15-20%, and that's substantially enough to recover the additional cost. I don't see that is an impediment. It is actually a good, and it will help the road transport industry much better.
Well, that's an interesting point. We've not heard yet. So thanks for bringing that to light, that the efficiency perhaps will offset the rise in cost as you see it. But we'll see how it goes. So thank you very much for joining us, Mr. Revankar. Appreciate your time here on CNBC-TV18. Thanks very much for being here. We'll take a very quick commercial break here. We are back with more. There's just 13 minutes to go for the pre-open session. Anuj is here with how he's seeing things. A little later after that, we'll have our technical experts, and we get you the top stocks to watch for the day as well. Stay tuned. Okay, welcome back. There is 11 minutes to go for the pre-open session. Anuj is here with a quick check on things in terms of how the markets are likely to be. Anuj, morning.
Morning, Prashant. You know what? On Friday I said that maybe in 21 days you moved the next 1,000 points. The market did 200 on that day itself, and at this rate, 5 or 6 days you'll be there. But this is a parabolic move for the market, and the most money is actually made in this zone. And as of now, there's no nervousness sign in the market, and that move to 20,000 has started. And now, this is not a political statement. The market truly has a double engine sort. Both Nifty IT and Nifty Bank actually set to participate. And my sense is
double or triple.
Let's not get there, but at least double engine is there. For triple, you will need Reliance also to participate, but as of now, it's Nifty Bank and Nifty IT. Triple would be something else, right? Anyway, small cap index has room for 10 to 15% quick rally. just a point I would make that this is a rally in which you want to exit the poor quality stocks because everything is rallying and perhaps stick to your good quality stocks. HDFC Twins could be in focus once again. Now that thesis is playing out. We made this point that more and more brokerages will now start turning positive because now they can write notes. Most of them were advisors to the merger. And now Morgan Stanley has come out with the report with 2110 price target. I think the other big trigger is monsoon. That's progressed really well. And July is said to be normal. And while the auto sales look a bit disappointing, the market will give them benefit of doubt because, in June, at least in the early part, there was deficiency of monsoon. The only worrying point is that the market is now extremely overbought. I mean, the FI net long position is 69% and at 75,000 contracts. Remember, when market bottomed out at around 1 lakh net shorts, and now we're almost getting there on the long side. Anyway, the market hasn't yet given reversal signs. The other interesting thing is put-call ratio, which has gone up to 1.58. There was big delivery buying in HDFC Twins and Infosys on Friday, which is something which stands out. Market structure is one step back, two step forward. There's some resistance at 19,250 to 19,300. If you take out 19,300, I think you can have a sharp move to 19,500.
Okay, thank you very much for that. Keep your eye on Bharti Airtel as well, because in a block deal which took place on Friday, Capital Group bought the shares. So that's a big investor buying into Bharti Airtel. Let's get in our technical experts, Mitesh Thakkar and Sudarshan Sukhani. They join in the morning. Good morning. We are lapping up gains. It's been day after day, a day of records for our markets. How would you trade the Nifty now, Mitesh, at opening?
Good morning. So, we've maintained long positions for the last 4 or 5 days and now suggesting trading the stop loss about 19,000, 19,020 odd levels. Slightly deep on the spot, but the run-up has been so fast that the moving averages are slightly lagging behind. So you need to be slow on trading the stop loss, but that's the way to go forward. I think the targets can now be in the near term, closer to about 19,450 to about 19,500. Anuj was talking about overbought situations. I think we are close to getting overbought. So I think another 200 odd points, you will see serious overbought readings on the Nifty chart, and therefore I think a couple of days of pullback or profit can happen. So we will try to take profits as we get closer to 19,450, but for the time being, stay long with the stop revised at about 19,020.
All right, thanks a lot for that, Mitesh. Morning, Sudarshan. What about you? Could you fill us in with your call?
Yeah, good morning. See, the Nifty has been in a strong uptrend, and the last 3 days saw big gaps. But not only were the gaps not filled, the Nifty actually built on those gaps, which means it closed much higher than the open. That tells us that these are breakaway gaps. That trading range of 18,500, 18,800 broke on the upside with significant gap action and promises to see much higher levels. So there is only one trade in the Nifty, and that trade is to buy the dip. Buy every dip, keep a stop under 19,000, and whenever you see some weakness, intraday or otherwise, go long in the index. I'm not so upbeat on the Bank Nifty. While the Bank Nifty had these gaps, it did not build during the day. The opening and the closing prices were the same. So I would say just focus on the Nifty. That itself should give you a lot of rewards.
Okay, all right. Got that. Focus on the Nifty. That's the call from Sudarshan. Sudarshan, fill us in with your calls as well for the day. Stock calls.
Well, BEL is a buying opportunity, Bharat Electronics. The stock had a big rally, a small correction, which is good because essentially you are buying a dip after a rally. So that's a buy with a stop under 116. Then I have Britannia. Britannia has a similar chart, very large, massive rally, then a very small correction and a current consolidation. That consolidation should break on the upside. Buy with a stop under 4,900. Eicher Motors, all these patterns are the same. Big rallies, then corrections. So we are trying to identify stocks that are undergoing minor corrections, assuming they will break on the upside and join the party again. Eicher Motors is a buy with a stop under 34.50. And finally, Tata Motors is a positional buy. It's making new highs and you really want to stay with it. Buy with a stop under 575.
Okay, gentlemen, good morning. Mitesh, what about you?
So on my list today, I have 3 buys and a sell. Infosys and TCS and Nifty IT is given some kind of a breakout. So they're on the buy list. Recommend buying Infosys with a stop below 1320 for targets of 1375. TCS buy on mile dip, let's around 3290. Keep a stop at 3250 and 3370 is the near-term price target. Also buy on RBL Bank with a stop at 177.5 for targets of 190. And the solitary sell call is Ambuja Cement, which I would recommend selling for a pullback or a decline to about levels of 405 and keep a stop at 435.
All right, gentlemen, thanks so much for joining in and filling us in with your call of the index as well as individual stocks. For the time being, we'll slip into a short break. You come back, we'll have pre-opening rates with us. We'll also be joined by Amit Anwani of Prabhudas Lilladher to discuss the latest trends in the defense space. Stay with us. Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're almost getting into pre-open, so good time to get in some derivative strategies. Chandan Deparia joins us to tell us exactly that. Hi, Chandan. Good morning. What do you have for us this morning?
Good morning, Nigel. Thanks for having me. So the index is continuously heading upwards. We have seen good momentum in last three trading sessions, especially post surpassing the previous lifetime high of 18,888 zone. So we believe that positionally now 18,888 could act as a major support, and this rally can extend to us 19,500 and beyond. Looking at the data setup, India VIX is holding well below 11. Put call ratio is heading upwards beyond 1.5. We have seen fresh put writing in Nifty at 19,000, 18,900 put, which also indicates the base of the market is shifting higher. And if you notice the price momentum last 60, 65 days, every time the index comes to 20-day and turns higher. And recently also it tested the same. So till Nifty holds above 18,888, we are expecting further momentum to extend. And for intraday point of view, one can keep the support near to 19,100 to play the swings in the market. Looking at the Bank Nifty index, here also we have given a consolidation breakout of last couple of days. It surpassed the key hurdle of 44,500 zone. So now the 44,444 is the support, and this rally can extend to us 45,250 kind of level. Now looking at the stock wise, first it is buy on M&M. We have seen good attraction in auto sector. Nifty auto index itself has given a breakout, entered into the new high territory. We have seen positive price action in M&M. 89% rollover is clearly visible. The index is moving with buying interest in all the auto stocks. The stock has given a consolidation breakout of last 15 days. So recommending to buy on M&M with a stop loss of 14.15. The stock has potential to head to us 1500 plus kind of level. And apart from M&M, we have positive view on the Maruti, Hero Moto, and other known F&O mid-cap auto ancillaries name as well. Looking at the other name, that is buy on L&T. This stock has seen rollover of 90%. In the last series, the open interest was significant down by 30%, with surge in the price by 10%, which clearly indicates short covering. And now it has given a fresh breakout, so momentum could be there. Selective capital goods stocks are also moving on upwards, so L&T is likely to outperform. One can buy with a stop loss of 24.35, and the stock has potential to rally to us 25.80 to 2600 levels.
Okay, thank you very much for that, Chandan. In today's Momentumizer, I'm looking at TCS. Now, TCS closed out with a gain of 2.7% on Friday. On Friday, it also crossed its 50, 100 and 200-day moving average with the up move that we saw. So those rates will also come up for you on the screen. The stock is still away by 7.5% from its 52-week high. So at a time when the rest of the market is hitting fresh highs, TCS is still some distance away. Also, now most IT companies hit their 52-week lows when Infosys came out with their numbers, because we had two back-to-back week numbers. They fell after TCS reported numbers, and then they fell again when Infosys reported. Since then, all the IT stocks have rebounded, but the rebound in TCS has been the least. Peers like HCL Tech, for instance, have rebounded 17% from their session lows. Now, NASDAQ has been doing very well, particularly over there. It's the generative AI, the promise of generative AI, which has boosted stocks like Nvidia, etc. But generally, NASDAQ has been up 31%. Can there be a rub-off impact on Indian IT? But that said, Q1 numbers are expected to be very, very muted. For TCS, we're expecting just a flat growth this time. H1 is going to be subdued. Results will be out on 12th of July. That's next Wednesday, I think. Next Wednesday is when TCS reports numbers along with HCL Tech. But watch out for TCS, because on Friday it did pretty well and it crossed all those important technical levels of 50, 100 and 200-day moving average with the up move. But let's get chatting with Prakash Diwan. He's been waiting by. Prakash, we spoke about IT, so don't want to once again touch upon TCS. But your thoughts on what Hero MotoCorp reported in their June monthly sales numbers? Sales are down 10%. The street was anticipating a number of 5 lakh units. This time they've only done 4.4 lakh units. Is this very disappointing, or do you think the markets will be able to take it in its stride because the sentiment has improved since the onset of the monsoon?
So it is disappointing for sure. I mean, their footprint in the tier 3 and rural markets is something which has been troubling them for quite some time. But what confounds the market is that they've not been able to improvise on any of their products to kind of make some headway in that price-sensitive segment. In fact, coincidentally, and anecdotally, they're launching the Harley Davidson, one of the variants of the Harley Davidson today. So, it's a company that has bread and butter business coming from, low entry point, price point bikes. But then they're looking at premiumization just to catch up with the Enfields and Bajaj Autos of the world. So there's a little bit of a mix-up there. I think the distraction also happens to be from the fact that their export markets had started going well. They've been sputtering and, doing sporadic stuff. So there is a little bit of a concern, and the market will read this as more as a symptom rather than the malaise itself. So it's the problem lies somewhere else, Riba, and I think the market would probably want to relook at that, given the fact that TVS and Bajaj Auto are growing at such remarkable clips. So this is not a market where you can blink for too long. Once in a while, it's fine. You make a mistake strategically. But this is going to cost them a bit in terms of disappointment. Yeah.
Okay, all right. Prakash, thanks a lot for that. Well, time to shift focus now to our defense space. Prabhulas Leeladhar, they're optimistic on the sector on the back of the government's focus here on making things at home and the robust order book pipeline as well. Amit Anwani, research analyst at PL, joins us on the show. Hi, Amit. Good morning. Thanks so much for joining in. Always good speaking to you. Well, tell us, from the defense pack, there's been plenty of interest out there. What's your top pick? Give us a rationale for it.
Sure. So see, we have been seeing defense has been the focus of this government, and we're seeing gradually and slowly the policies have been favoring the sector, including the focus on co-production, transfer of technology, reducing the import component, and at the same time making the robust supply chains for the platform OEMs. And we are seeing a lot of fleets at all 3 services getting aged. So there's a lot of capex which is on the cards for all of these 3 services. And broadly, if we see all the DPSU platform companies are at the cusp of performing and delivering good sustainable revenue in the coming years. And we have seen the price also rallying in past 1 year or more than that. Yeah.
How do investors align themselves with the volatility in earnings? These are very large orders that the companies have won, but they're spread over 10 to 15 years. You don't make fighter jets in 2 or 3 years. These take a very long time to fructify. And in that period, there is going to be a lot of volatility in terms of earnings in the order book, in the pipeline, etc. So what should investors do when you see those dips post earnings? Or how do you measure the earnings cycle for these companies now?
Right. So I think earnings on a quarterly basis will definitely be volatile. So if we talk about the order book of the large OEMs, including HL at 80,000, BL at roughly about 55,000, MDL at 38, 40,000. So they're talking about at least, order pipeline or intake in next 2-3 years as similar to what they have as an order book. So there's a lot of sustainability which is going to develop compared to the last decade versus the next 5 years with respect to earning sustainability going forward. At the same time, we are seeing, with the current level of manpower and facilities, they can at least achieve 1.5, 1.7x revenue over the next 2-3 years. I think obviously backed by the robust order intake which they're expecting. So having said that, there's a lot of chance of operating leverage playing on, and we have to make a longer view. As you said, a lot of defense companies are now accumulating a lot of order book, 3 to 4x for companies like BEL, HL, and at least 7-8x for shipbuilding companies where the timeline is very long gestation. But having said that, as there are talk that India targeting almost $25 billion, including $5 billion of exports in next 4 years. That itself indicates there is a lot of chance of good revenue sustainability, maybe double digit for next 4-5 years for large OEM platforms. And at the same time, we are focusing on, as I said, a lot of transfer of technology for the robust supply chain in India for the platform OEMs. I think this will play. But at the same time, we have to keep a long view, and directionally defense spec with a longer term view definitely is for the good ride.
So Amit, hi, good morning. So yeah, the tailwinds are there and well established, well understood now. But with stocks, you would say extend the time horizon. I mean, if you're buying here and your picks are BEL and BEML?
Right. So I think we have rating right now on BEL. So we're positive on BEL. And as we said, obviously the stock has rallied a lot and it's trading at roughly about 22, 23x forward. But having said that, because of sustainability, and BEL is largely beneficiary when any order comes into any services, including aircraft, submarine, because of the defense electronics. And we are seeing a lot of sustainability with respect to performance, order intake, and at the same time margins. So I think we can expect some re-rating. At the same time, these companies are talking about at least 2 to 3 years of sustainable order intake, which will also play out. So we have a buy rating on BEL. But having said that, I think HL as well as MDL can also gain in the long term. HL especially, we saw the repair overall opportunity also panning out for HL. And there is a good sustainability, double-digit growth can come in the longer term when they start delivering the LCA aircraft starting FY25. At the same time, there are a lot of, they're talking about 48,000 crore order pipeline for FY24 and at least 80,000 to 1 lakh for next 2 to 3 years, including a lot of helicopter orders, including advanced combat, light utility. So I think HL can also play out in a longer term, despite there's been a significant rally recently. And MDL, I think they got the very good capacity, maybe 10 submarines and 10 warships to manufacture. And they're, I think, currently at 5 each. So there's a lot of traction which can develop post one big order which is expected, in which L&T along with the foreign partner and MDL along with the foreign partner are there for the submarine. So that could be about 45,000 crore large order. So I think these three platforms I expect to perform very decently and sustainably.
Well, BEL, HAL and Mazgaon Dock are the three names which Amit is highlighting could be sustainable picks from here. Thanks very much, Amit. Good speaking with you here on CNBC-TV18. Well, there's 6 minutes to go for the market open. Sudarshan is back with us with his 9:10 call. Sudarshan, morning again.
Good morning. BEL is a buy and we just heard about it with a stop under 116.
Okay. BEL with a stop under 116 is Sudarshan's 9:10 call. Mitesh, what about you?
I'll go with the buy on Infi with a stop below 1320 for targets of 1375.
Okay. Thank you, gentlemen. We'll touch base with you later on as the day progresses. For now, L&T Group is eyeing leadership in the realty space and a berth in the top 5 in the IT sector. Lata joins in with the key takeaways from her exclusive off-camera conversation with the MD and CEO of the company, N. Subramaniam, who's soon going to be the chairman of the conglomerate. Lata.
Well, that's right. Actually, it was a conversation and off-camera, so it was not meant to be on revenue growth and margins and, nitpicking on small things, but more strategy chat. And surprise, surprise, the maximum time that was devoted by the CEO was on realty. And the clear mandate is that we want to make it the largest developer in the country in a few years. And they're going about it in a very careful manner as far as capital is concerned. One is their deal with this Singapore-based listed entity called Capital Land. It's an India trust. And what they have done is that it's a 50-50 JV with Capital Land agreeing to buy everything that L&T constructs in a phased manner over 2 years. So money is not locked up for L&T Realty and they can keep reinvesting and rotating their funds. That's the idea. The initial deal is to build about 6 million square feet of office space in, I think, Bengaluru, Chennai. Those are the main places that they are looking at. The other deal the realty company has is with HDFC Capital Advisors. That is the PE unit of HDFC. And here as well, the tie-up is such that the JV buys the land. So again, not too much of L&T Realty's money is tied up. And the sole developer will have to be, of course, L&T Realty. So that's how they're expecting to become, one of the largest, targeting over 10,000 crores in a couple of years. The other point that the MD mentioned was on LTI Mindtree. They acknowledged that they missed the bus, the big Y2K journey that IT companies, embarked on. But they are now targeting to get into the top 5. Actually, they're already top 5 in terms of market cap. But in terms of sales, they are a good 20,000 crores less than TechM. So perhaps the idea is to get there. And of course, at the moment, older clients are giving less orders, but they're very confident that this will catch up. The other big part of the conversation was on ESG. Remember, MSCI has just upgraded them to BB from B. Now they are doing an audit of every factory of theirs to formulating a plan to make it both water neutral as well as carbon neutral. And finally, the general question on capex growth, he was reasonably confident that private capex is coming up. It's risen from 22 to 27% of their order book. But government capex is what, of course, gives them the bread and butter. Huge projects coming up also in the Gulf on solar, where they are, getting something like 3,000 to 4,000 megawatts of solar power is what they are manufacturing over there, along with green hydrogen plants. But he was most triumphant about the two things that we Mumbaikars should be interested in. Completed his part of the coastal road, as also completed the Trans-Harbour Link.
Okay, all right. Thanks a lot for that, Lata. By the way, we have Bajaj Auto's numbers that are flashing for you on the screen. A little bit lower than what Nomura was estimating, but I think the exports numbers as well should come up for you. That's down. It's come in at around 1.41 lakh units. But
so it looks like I think it's the exports which have missed. The domestic should be fine because Nomura was expecting exports to come in at 1.25 lakh units, and I think the export number has come in lower than that. So it looks like the domestic demand is fine. The overall miss on the sales would be driven by the exports amount. But let's go across to Sonal now. She's going to give us talk a little bit more about Gujarat Gas and IGL.
Thanks a lot for that. For Gujarat Gas, there's a positive news that has come about because the government has increased the import duty on commercially used propane to 19.25% versus 2.75%. This is applicable from 1st of July. And this would mean that it will increase the equivalent propane price by 5 to 6 rupees per SCM, which is a positive for Gujarat Gas, of course, because it is a competitive product. And right now, the propane prices before the import duty hike was around 32 rupees, which was cheaper than Gujarat Gas's price of 38.6 rupees per SCM. So the differential will be taken care of, and that would mean better volumes for Gujarat Gas, or at least a competitive price here. For IGL, Citi has written on the company because there was a management meet. They say that EVs are unlikely to pose a threat over the medium term, and management is also keen in exploring some inorganic opportunities and evaluating new phases or new scope of businesses as well.
Okay, all right. So, Nal, thanks a lot for that. Well, the first tick is in. The Nifty opens up, gap up. We're getting used to this now. Nifty up close to around 60 points, half a century straight off the bat. Let's focus on a few winners. Wipro is up close to 100%. That's one of the winners. Mahindra & Mahindra is up close to 100%. And Ultratech posted good quarterly update. The street likes it. When you grow 20% on that sort of a base, it's telling you that they've gained market share as well. So that stock has opened up in the green. Hero MotoCorp on the flip side, well, those numbers were a little bit disappointing. And that's down close to around 1.5%. For Maruti Suzuki as well, down close to around 0.5% odd. But the breadth of the market is looking very, very good. Close to around 2,000 stocks are advancing in comparison to close to around 200 stocks, 250 stocks as well that are declining. The big movers, though, from the broader markets, which Rima will take forward. Gujarat Gas flying away. The additional duty on propane being pulled into the country, well, that could give them a competitive advantage. So that's up close to around 4.5%. And Strides is flying away. Strides is up close to around 6% as we speak. But Rima, run us through the list.
Well, L&T Finance Holding is also a big mover with a change of guard there. The stock is open with a gain of 3.5%. Ashok Leyland has reported their monthly sales numbers. CV volumes have gone up by 5% on a year-on-year basis. The domestic CV volume growth is at 10%, and that's something the street likes. And the stock has been given a thumbs up, opens with a gain of 2.5% on that. In other auto sales numbers, Tata Motors has opened up with a positive bias, but no big gain, just up close to about 0.1%. On the losing side, you've got Maruti with a cut of 1%. Again, the street is disappointed by the June sales numbers, and Bajaj Auto sales are also out. Total two-wheeler sales are down 2%, and the stock is open with a cut of 0.5%. That's about the auto sales numbers. Some other gainers and movers include NCC. They won orders worth 2,000 crore in the month of June. There is some news on Granules, which has pushed the stock higher by close to about 2%. On the losing side, softness seen in AMC companies. Remember, they had a double-digit rally on Friday. So today, profit booking seen in Nippon, HDFC, AMC, UTI, AMC, down 1 to 2% on all these names. Apollo Tyres, where Morgan Stanley has downgraded the stock to an equal weight. The stock opens with a cut of close to about 0.5%. So all in all, it's a pretty good opening. The mid-caps are moving in step with the frontliners, and look at the advanced decline ratio. I know it's only 2 minutes, but it's looking good.
Oh, it's looked good for a while, Rima, absolutely. And 0.5% again once more as we start another week of trade. Let's just have the Nifty up. So 80 points, I mean, galloping ahead. And, you know, what typically happens once you make new all-time highs also is the fact that, you know, you've got to be willing. I mean, if you are trading, you've got to be able to you've got to be willing to buy breaks higher as well, not just buy the dips, which basically has been the strategy all through, you know, the last 300-400 points when the market was in the range. But, you know, things pick up, pace picks up, momentum picks up a little bit. And you've got to be willing to buy gap ups, etc., which is harder to do psychologically, mentally, but it's a bit of a change as compared to what we've seen earlier. So, you know, I think the Nifty Bank will come up on your screen where we hit 44,995 on the Nifty Bank. That's about 0.5% higher. And we were saying this earlier, maybe the Nifty Bank, which basically saw a bit of a later breakout as compared to the Nifty, has got more catching up to do, so keep an eye on that. We're, of course, with this kind of open once again at a fresh all-time high. Manish Gunwani is with us. He's head of equities at Bandhan AMC, a veteran in the institutional money management business, really. Manish, good morning. Great to have you with us here. Thank you very much for joining us. How are you feeling, Manish, on about markets with the new highs? You know, you guys at Bandhan are... You've got, in a way, you're growing the business, you're getting inflows, and you've got to deploy. And that's at all-time highs, always a bit of a challenge. How are you doing it?
Yeah, Prashant, I know it's all-time high, but if you see on a 2-year basis, the market hasn't really done all that much. So I think it's a fairly interesting time in the macro, in the sense that globally, if you see, two surprising things are happening. One is everyone, or a lot of people thought that given the monetary tightening, we will see a big slowdown in global growth. Now, that surprisingly is not happening, especially the services side of the global economy is firing fairly big time. And we are seeing that global growth has surpassed expectations. That's the first point. The second point is that we are in a fairly peculiar configuration where the Fed is hiking rates, commodities are correcting, but at the same time, EM currencies are doing well. So I think the story of this year is actually the fall in the dollar, because if you see typically when the dollar falls, commodities go up. But the surprising part is commodities are falling, but yet emerging market and emerging market currencies, they're doing pretty well. So that's the peculiar configuration we're facing, which is kind of, I think, being the main contributor to this bull run of recent times. And I think it's difficult to see that changing, in the sense that the dollar is obviously very expensive on a fundamental basis, because it's done very well last 10, 12 years. A lot of EMs have good macro stability, whether it's India, Indonesia, and even the commodity countries like Brazil, etc. They've been beaten down over the last 10, 12 years. And we're also seeing central banks sell dollar. So I think that's the interesting point about this year, that I think the dollar trajectory is kind of driving a lot of movements.
Manish, morning. So in terms of fresh capital deployment, now banks is a consensus overweight. Earnings growth outlook is fairly resilient, robust. The valuations are reasonable. But what about the other two pockets where the growth outlook is still a bit uncertain or cloudy? One is IT, and the other one is the rural economy, because the rural economy has gone through a long stretch of stress. Can growth pick up in these pockets? So if you would like to talk about and tell us, would you deploy capital in IT and rural, and how much of an overweight should banks be at current levels in our portfolio?
So as a fund manager, I think a bet on rural makes sense. Overall, our view is that the domestic economy is poised better than the global economy, because while we are seeing emerging markets do well at this point of time, the intensity of monetary tightening is such that you have to be prepared that at any time some big global event may happen, whether it's in credit or geopolitics, etc. But I think the domestic economy is on strong footing. Current account deficit, inflation, etc. I think India has done very well related to global peers. So our focus or our overweights have been more in domestic sectors, which include financials, as you mentioned, cement, real estate, industrials, auto, etc. So to that extent, I would probably bet more on a domestic segment at this point of time. Although I think that the capital that's flowing into emerging markets can drive a bit of global reflation. And for some time, given that India has outperformed a lot of the EM markets, we may see, especially China, I think we may see a phase where Chinese market bounces back and Indian market kind of underperforms China. But I still think that from a medium perspective, I would bet on rural versus IT at this point of time.
All right. Hi, Manish. Good morning. Manish, some of these new age themes, they listed and they bombed out. Some of them became half, some of them became a third. But in the past quarter, they came back in style from those beaten down levels. Do you think bulk of the, of the good news or any kind of recovery, management commentary, that's all in the price, or is there more room?
I am quite positive on a few of them. I think you have to be obviously selective, but I've always maintained that there can be companies which are temporarily loss-making, but that should not preclude you from taking a 5-10-year view and looking at these companies. Now, you will obviously need a higher margin of safety to weather the next few years of losses. But I do think that a couple of them look fairly healthy to me from a long-term perspective.
fairly healthy from a longer-term perspective. Just a quick word on the asset management businesses, if you have a view, Manish. I mean, you're intimately aware of how they work. I mean, what are the profitability levers, etc. On Friday, these stocks were very large gainers, 10, 12, 15% kind of movers. What's the road ahead, according to you? And would you want to own any of these businesses?
So I think clearly this industry's market cap has suffered a lot over the last 2-3 years due to a mix of different things, and some of those challenges still remain. So one part is the regulatory part, which obviously we saw change for the better in recent announcements. But I think that, and long term, we all know that financialization is a big theme. We think AUMs will definitely grow. A lot of these companies will become very large companies. The challenge is in terms of margins and competitive pressure. I don't think that really goes away. So we will have these cycles where people become very pessimistic on margins, yields, etc. And there'll be phases where people become overtly optimistic. So you have to be a bit of trading around these sentiments. See, this is a sector which has great ROE, ROC. It has good AUM growth. But it's a sector you have to remember that where a lot of people want to enter, and it's easy to enter in one sense. So I think, again, you have to be very cognizant of valuations. You have to be clear about which player is going to get market share. So I would think that if the stocks have done very well and let's say they continue to do well, you have to be a bit cautious on the sector.
Manish, I know it's impossible to predict the market, but do you see a scenario in the next 6 months where markets could decline 15-20% at the index level? Are there any such risks on the horizon?
Well, I think given the quantity of a correction, obviously prone to a lot of risk. We all know that short-term markets are difficult to predict, but I think we should not lose our bearings. We are still in the midst of a global tightening of monetary policy. I guess what has happened is the fiscal policy globally has been a bit loose, which is why probably growth has surprised. But I think clearly a lot of central bankers are very keen to get inflation down from even here, although inflation's fallen a bit. And when you are in that phase, clearly there's always a chance of a big credit event or some geopolitical accident happening. So I think volatility in second half will be quite high. Second half of this year.
All right, Manish, just hold on to that thought. We are getting some news coming in from Money Control. They are saying that Concord, the wheels are set in motions, and initial bids for Concord could be invited by August 1st. So we'll try to get you more on that story. But Concord is holding steady with a gain of around 2%. So just keep an eye out on that stock. And the other one that's moving very, very well is Suzlon. Now it's at close to around 16.5 rupees. I remember the stock in single digits. So Suzlon is moving higher on very large volumes. Manish, this renewable theme has come back in style. Some of those power-related stocks as well. Are you looking out for this renewable theme? And if yes, how to play that? Because there's very limited, choice out there.
No, I think power in general is a good theme because stocks are cheap. Between 2010 and 2020, we had a very big down cycle for this sector. And clearly, if we take a medium to long-term perspective of the power sector, most of the action will be on the renewable side. Now, as I said, obviously, there's not too much of direct link, but the other thing you can also look at, because we've seen this happen in Europe, for example, is that when renewable becomes a bigger part of generation, you also need a lot of investments in distribution and transmission. So that entire value chain of renewable generation, transmission, distribution, I think there are a fair amount of stocks there, and also the funding of that through financiers of power capex. I think there are a fair amount of stocks which can be used to play that theme.
ICICI Securities, I think on Friday morning, last Friday morning, I think initiated coverage on Suzlon. So it's interesting, right, that this is also happening. And I think they have a price target of 24 rupees on Suzlon. Stocks up about 7.5%, very large volumes for this point in the day. Manish, just a quick word, if you will, on insurers. You know, you were talking about financialization. That's the other big, large space where which was hurt. And again, for stocks have done well this year, but if you take a slightly longer view, 3-4 years, they've not really done very much. What's the view?
So structurally, first of all, I personally am bullish more on general insurance than life insurance in terms of premium growth over 5-10 years. But having said that, I do think that both offer decent risk reward. Life insurance, as you alluded, basically saw a lot of regulatory actions which went adverse for the stock movements. But I think the good part of that is that it's a fairly consolidated sector. You obviously need a fair amount of capital to enter. You need a brand where people who are buying policies for 10-20 years can trust that brand. So there is a moat to that sector. The second thing is, if you see the traditional experience of large economies, it tends to grow faster than GDP because it's a discretionary product. It's a very urban, affluent product. So in that sense, the top-down scenario on life insurance is great from a 5-10 year perspective. We've seen some regulatory challenges, and it's anyone's guess if those will aggravate. But definitely, I think there should be some exposure in your portfolio to this.
Manish, we'll leave the conversation here. Thank you very much for joining in and look forward to chatting with you more frequently. By the way, for the markets, we've hit 19,300. We opened with a gain of about 50-60 points, but quickly have scaled up and added on more than 100 points. The sensex too is up close to about 400 points. The corporate on our radar right now is Bajaj Auto. The June auto sales have come in slightly lower than what the street was anticipating. On the whole, the total sales have seen a decline of 2%. The domestic sales have gone up 45% at 2 lakh units. While it's up handsomely on a year-on-year basis at 45%, on a month-on-month basis, the domestic sales have fallen by 12%. There you have it. 2 lakh units in the month of June, which compares with 2.28 lakh units in the month of May. Coming to exports, the other piece of this puzzle. Exports are down 32% on a year-on-year basis. They've come in at 1.41 lakh units. But as this chart would show you, it's gone up for the third consecutive month on a month-on-month basis. So exports are seeing some green shoots and they are rising. And month-on-month, the exports are up 11%. Rakesh Sharma, the Executive Director at Bajaj Auto, is now with us to discuss more on their June performance. Mr. Sharma, morning and thanks for joining in. This is Reema here. First, if you could talk about this 12% decline in the domestic sales on a month-on-month basis at 2 lakh units, and what's the trajectory? Could you pick up from this number?
Good morning, Reena. The June domestic sales in motorcycles being lower than May is inevitable because, in the north, there is a mini season of sorts during the period of May to early June or mid-June, which is driven by marriages. And therefore, there is nothing unusual about June being lower. And I would say that July, with the onset of monsoons in most parts of the country, would be lower than June. So it's as expected, actually.
So you're saying July will be even lower than June for the domestic sales? Yeah,
yes, because, mid-April to almost early June is the marriage season in the north that drives up the sales. And then, you have the monsoons in July. And then, late August, September, sales start to improve.
So this decline, sir, So this decline that we are seeing is in line with historical seasonality, right? It's not that there is some other stress that we are seeing, underlying stress in the domestic
Absolutely.
market.
It's in line with the trends, though I may add that on a retail basis, the industry is now in low single digits. So the industry performance in quarter one, if you look at the Vahan retail data which is coming in, which had perked up really in quarter four, which is the final quarter of last year, to double digits, about 13, 14%, has now in this quarter come down to about low single digit performance.
Okay.
So that's an important point to note.
All right. Good morning, Mr. Sharma. Nigel on this side. Let's talk about exports because that's the bright spark, right? Whenever you've been joining us, you're telling us things are gradually improving out there, and it's evident in the numbers. Now you're clocking 1.4 lakh odd, and some brokerages are estimating you cross that 1.5 lakh odd in the coming months. That said, could you tell us, will exports on a month-on-month basis continue to improve? And also, since we have been focusing on Nigeria, and the last recorded number I think you told us was around 30,000 units for a month, what was it in the past month?
So exports, like we've been saying, is going to be is now on the recovery path, but the recovery is going to be gradual. I cannot precisely pin down when we will cross 150,000. But yes, that is the next milestone to hit at. For the moment, we will try to see that July is better than June, even if it is marginally so. A lot, of course, depends on Nigeria because it is the largest market. And Nigeria, post-elections, post-transition to the new government, is now dealing with, new set of policies, which I think are all aimed in the right direction, whether it is to do with forex management or reduction of fuel subsidies, which are causing momentary short-term pain, both in terms of availability of foreign exchange and driving up the prices on the street because subsidies are being rationalized. These things will, I think, get digested over a period of 2-3 months. People will get used to new ticket prices for commuting, and hopefully that would see Nigeria come back in a more stable form.
What was the number, Mr. Sharma, for June for Nigeria, sir?
Our retails are at the similar levels. I'd not said 30,000 if I'd said 28,000. And they're around the same region. I don't have the exact number because we'll get it by tomorrow. But we expect it to be in the similar region.
So around just under 30,000 odd. And you told us that the peak used to be about 50,000 in Nigeria.
Yes.
Do you have visibility for those kind of numbers? I mean, a few months down the line? Or you think there is still some distance off?
Yes, so that's what I said, that, the key thing is that there has been a 24% inflation in Nigeria driven by the removal of subsidies in the fuel prices. That has to translate into the ticket prices for the riders going up, the commuters going up, which will bring back the payback and again make buying a motorcycle as a taxi a very good business option. So now that would take a little time, I guess. And once that is done, I think the policies are aimed at getting some sanity in the foreign exchange because there was a parallel market for foreign exchange that is converging to single window clearance. The subsidies are being rationalized. Fuel prices are being set. So they're taking actions to put the country on a stable wicket, and which is very good for us. And I don't know how much time it will take to stabilize, maybe 3-4 months, but the trends are good.
Sir, your peer Hero MotoCorp announced a minor price hike of 1.5%, up to 1.5% over the weekend. Are you looking at any price increases?
Yes, we have been looking at costs and prices based on inputs for Q2 projections and some of the regulatory changes, and of course monitoring competitive price hikes. So we will be looking at our numbers and see if there is a reason to take price hike.
Okay, all right. Mr. Sharma, what about the EV focus? You are gradually ramping up there towards 10,000 units a month. There has been a pullback on some of the subsidies. have you seen demand taking a bit of a knock? And also, what kind of a number are you clocking on a month-on-month basis?
Yeah, so, it was a very big jolt when the subsidies were removed, or not removed, but subsidies were reduced.
Pulled back.
And therefore, we as an industry saw the month of May rocketing because the news had spread that the prices are going to increase because of the reduction of subsidies. So an industry which was generally doing about 65,000, I'm talking of the high-speed electric scooter industry, which was generally doing about 65 to 70,000 units per month, rocketed to about 1 lakh in May, and it has fallen to 40,000 in June. But if you sort of take average of May and June, which is 1 lakh plus 40, we are back at that 70,000 unit. Now, prices have increased, but we expect the industry to come back to 65,000 in the least. And our plans after, sort of overcoming this little blip, continue to expand our geographic footprint, build our brand, and drive to.
What is the number, sir? What is the number for Bajaj Auto? We got the industry number for you. What was it?
We build about 7,000 units.
Okay. Mr. Sharma, on Triumph, do you have a better sense of what kind of, could you make a projection numerically, volume-wise? What would you expect the bike to do? How many?
Well, I'm going to send you a YouTube link for day after tomorrow, which is when we launch in India and we reveal the price. And I think you, along with a lot of people, can make a judgment on that. We'll see how it goes. But I can tell you that after the unveiling in London last week, there's palpable excitement. And without the price being there and without people having seen the product physically, we already have bookings which exceed our production capacity for July. So there is a lot of excitement, and let's see.
What is your production capacity, sir?
Well, the production capacity is a movable figure. We've just launched, we've just inaugurated our new plant. So that sort of will be ramped up.
What is on an overall steady basis, what would be the capacity for this product?
See,
once you've ramped up
that this is a sort of a futile question, that what is the capacity, and because these
you would start with, Mr. Sharma, you would start with something, right? You would have, or you wouldn't go in without any numbers in mind, right?
See,
and then, of course, you would ramp up if demand picks up, etc.
I would invite you to understand how automobile capacities are determined, So I keep getting this question, and that's why I ask. It's an inconsequential question. I mean, if tomorrow if let's say in 3 months we had a demand of 10,000 units, we would be able to beat it, because the capacity is a collective of many components from vendors, and the Bajaj Auto capacity in itself is really around the assembly. And therefore, as the demand ramps up, it's quite possible to increase capacities.
So, but you've still not put a number.
There is a Nomura note which says the initial.
In a few months' time, I told you, in a few months' time, it's 10,000. We'll do 10,000. I don't think it serves any purpose to say at this point of time what is the capacity.
Okay, got it.
So there is a Nomura note which came out last week, and they're saying the initial planned capacity of Bajaj Auto Triumph is 6,000 to 8,000 units.
No, I think Mr. Sharma is now telling us
because it's fungible. I think from what
it's fungible, and we'll get the more intricate details in the next couple of days, Mr. Sharma. We'll wait by for the pricing, and analysts will be working on the numbers. I'll be visiting your showroom and
with a check.
First we'll test ride it, and then pricing is important, right? And then, but all the best, Mr. Sharma. Thanks so much for joining in.
Nigel, I see a weakening in your resolve. You know, you were ready to sign the check, and now you're saying
No, the bike
better
is
bang
good,
in your application fast.
The check is in. I mean, and everyone is focusing on the capacity, sir. I just want to get the initial feelers about booking because I want to know how far in the line I am. You know? So, all right, all the best. Thanks so much for joining in. Well, for the time being, though, we'll slip into a short break. On the other side, Mr. Vinod Agarwal of Eicher Motors will be joining in to talk about their June auto sales numbers. And later on, we'll connect with Abhishek Agarwal of Godavari Power and Ispat to talk about the large trade that happened on June 30th. Stay with us.
Welcome back. It's the day of the auto sales numbers, and we've got another management waiting by to chat with us. It's the Eicher Motors CV business, VECV as it's called. The domestic sales are up 12%, and the CV sales in that are up 6.5%. But exports are a bit subdued. Vinod Agarwal, Managing Director and the CEO of VE Commercial Vehicles at Eicher Motors, is now with us on the show. Mr. Agarwal, thank you very much for joining in. While your total sales are up 6.5%, I'm looking at the domestic numbers. And the domestic number is very strong. It's gone up by 12.5% on a year-on-year basis. And for Q1, that's April, May, June, the domestic volumes is 18.5%. So do you think can you continue with this kind of a run rate? And if yes, will you be able to perhaps beat your guidance? Your guidance was for a double-digit volume for this year. Do you think maybe you can push it closer to high teens?
I think that's what we will attempt at. If you go by our first quarter performance, definitely our growth has been very good, and we would like to maintain that. And if you look at the industry, the growth is very good in, you can say, in the buses segment and in the heavy duty segment. But light and medium duty trucks are down a little bit. So exports are down quite a lot. So overall we have grown, and that's what is reflected in our numbers.
So heavy duty and buses is strong, but on the flip side, LCV and exports is a bit subdued. So can you talk about exports a bit? You had, in our last interaction, told us about the weakness in Bangladesh, Sri Lanka. But are there any green shoots? Do you think exports has bottomed out, or does it get worse from here on in the subsequent months?
It seems that it is at the rock bottom right now, because we have dropped to almost, I'm talking of the industry. The industry exports out of the country has dropped to almost 2,000 units per month for 3.5 ton and above, which used to be around 6,000. So it is 1/3 of the peak numbers in exports. And it is largely led by Bangladesh, because Bangladesh is the large market for us and for the entire CV industry. So therefore, it seems that it's at the rock bottom, and from here on, we should see some growth as we go forward.
You have plans to export to Latin America, right?
We are planned, yes, we have.
When will that take off?
It has started. We have started with Ecuador and maybe one or more countries. So it will happen slowly and steadily. It is not going to reflect in numbers very soon. But it will, once it starts happening, then it will happen step by step.
All right. Hi, good morning, Mr. Agarwal. Have you all altered the pricing? Because some costs have gone up, right, as you all transform to BS6. Could you give us a quantum this year so far?
Pricing has been basically it is coming in from two sides. One is that there is some price increase. The other is there is I think, big resolve across the industry to get the discounts at the right levels. So therefore, from both sides, the price management has to improve. It has improved a little bit, but it has to improve more. Let's hope that this should happen.
Buses, that's also another very strong segment for you. In Q4, you had, I think, delivered to the city of Chandigarh. What are the other big bus tenders that are out which could drive bus sales from here on for you?
I think there are a lot of tenders which are in the pipeline.
Which you are participating in, sir, and could fructify.
And I'm sure the payment security mechanism, which the industry had been talking on the electric buses, that should happen. Once that happens, I think the entire industry will participate. As you all know, that last time the tender which came in for 5,000 odd buses, no one participated from the industry because of the tough conditions on the security mechanism, payment security, because we are supposed to give the buses for 12 years on per kilometer basis without any guarantee on payments. So hopefully that will resolve. That has to resolve before the next tenders come in. And that's why the tenders are getting delayed, because it is still not resolved.
So if bus tenders are getting delayed, do you think the bus sales will also be under pressure, right?
Not because of that. Bus sales are also dependent on a lot of other segments. The other segments are doing extremely well, like the demand from schools, or demand from staffing segment, or demand from intercity segments from private operators. The only delay in the state transport undertaking orders, or the state government orders, which are dependent on this, the entire government backing the payment security mechanism. So I think the demand from state transport undertakings, that is long overdue, because they have very, very aged fleet now, and they have to replace that fleet, and hopefully that should happen soon.
So your heavy-duty truck market share was at 8.3%. It had increased to 8.3% in FY23, and this includes Volvo and Eicher. As of Q1,
Volvo and Eicher put together, it is more than 9%.
More than, as of Q1, it's 9%?
Yes, 9.5%.
9.5%. And as of FY23, that number was?
FY23, it was around 8.5%. So we are up by 1%.
So you've added 100 basis points in your heavy-duty truck market share in Q1. From 8.5%, it's gone to 9.5%. And what explains this weakness in the LCV market, and how long do you think it will last?
I think it is temporary. If you see month-on-month numbers, already there is some improvement. There could be two reasons. One is this OBD2 impact. There has been some buying in March, because March, if you look at the March sales of light and medium duty, that was very, very strong. So therefore some impact of that could be there. The other impact which is there is due to the CNG trucks. If you go back to last year quarter one was still CNG truck sales were very high, and after which it started dropping because of the pricing. CNG pricing became not very attractive. So the second reason is the CNG truck. The earlier people were replacing their old trucks with the CNG fuel trucks. That has got slightly deferred. I think the replacements are now getting deferred for CNG trucks. And then other than that, I don't see any concern, because the economy is doing well and there is good demand from all other segments, e-commerce or fruit and vegetables or auto components. I think the other demand, other segments where the light and medium duty trucks are used, those segments continue to remain strong. The only reason could be the CN.
Okay, sir, we'll leave it at that. Thank you very much for joining in. By the way, the markets are climbing on, and it's courtesy HDFC Limited and HDFC Bank. Remember, the merger between the two is effective. The record date is 13th of July, and these stocks are scaling up 3.5% on HDFC Limited, and HDFC Bank is now up 2.5%. So it's a big day now.
Yeah, I'll tell you what, Remind, HDFC Limited, that's doing better because there was that arbitrage of close to around 1%. So that's why HDFC Limited is doing better. And just pull up the month-to-date chart. You pull up HDFC, either of the HDFCs, and you can pull up the Nifty. just look at that. After a long span, we are seeing that HDFC, those twins, they've outperformed the Nifty. The Nifty is up 4.5% odd in this month, while the HDFC twins are up between 9 to around 10% odd. On the editors' roundtable a couple of weeks ago, we put this piece out that, remember, HDFC twins have been relative underperformers in comparison to the Nifty in the last 3 months and the last 3 years. Has its time come, at least in this month so far? Perfect. That's the chart we're looking at. It's been a big outperformer in month to date, HDFC twins leading the way. But time to get back to the broader markets. Godavari Power and Ispat, well, that's the stock on our radar. Multiple trades happened on Friday's trading session. Promoter sold close to 3% stake in the company. Mr. Abhishek Agarwal, the executive director at Godavari Power and Ispat, joins us on the show. Hi, Abhishek. Good morning. Thanks so much for speaking to us here on CNBC-TV18. Well, we know you're in the silent period, but we want some further clarity with regard to this large trade that took place. 3% was sold. Does the promoter entity want to sell more in the company, or is that done? And also, if you could tell us, we have one buyer. We have, Param Capital that's bought close to 10 lakh shares. But who were the others?
Morning, Nigel. As you rightly mentioned, we have diluted some equity in the company. We have been looking to get some base investors on board, and so there was an opportunity, and we have diluted certain stake. And as you asked, what about the other stakeholders? So I would say it's Param Capital and its associates.
Oh, so the entire block was picked up by Param Capital and its associates. Is that correct?
Yep.
Okay. All right. And the promoter stake as of March was 67.5%. So now you've sold close to 3.3%. You would come down, by 3.5% or thereabouts. So around 64% is what the promoter entity holds. Do they want to sell more, or do you think that they're done as of now?
See, at the moment, I think we are done. But of course, as we said, we were always looking to get some good investors on board. So if there's an opportunity which presents later on, we might. But at the moment, I think we're done for the time.
Okay, all right. And Param Capital has bought the entire 46 lakh shares, is what it's telling us, right? Param Capital and Associates.
So I would clarify. So it's Mr. Mukul Agrawal and his associates.
Mr. Mukul, and they have picked up the entire block.
Right.
Lovely. All right. So we've cleared that. Your shareholders will be wondering, what does Mr. Agarwal and family want to do with this money? I mean, it's free. It's your money. So, y'all have built the company. I've seen the company in market capitalization of close to 500 crores. Today, for that 3%, you're raising more than 200 crores. So that's good work. You've created a lot of wealth for shareholders. Should your shareholders watch out for anything with regard to this money that you've raised, or do you all have your plans of your own?
See, the only reason we diluted was because we wanted to get ACE investor on board. No other specific reason. And what we want to do with the money, let's see. So nothing is decided. But eventually, if there is something happening, we'll definitely come out in the open. And we'll declare in the market.
Okay, great. What about pricing? How have pellet prices moved? Domestic realization, you were telling us that it was 10% higher than exports. So could you tell us what is the updated domestic price number that you have? I think it was around 9,000 rupees the last time we joined. So what is the updated number? Has it slipped a little bit? And getting into monsoons, is there some weakness?
No. So the numbers are still at the same level. We are still selling pellets domestically at 9,000 levels. And, I would like to mention here, so we have come out with a new product, from a 65 Fe high-grade pellets. Now we have introduced a new product called 66 Fe pellets, which also we are selling everything domestically at the moment. And we're getting a much better relation compared to a 65 Fe pellets. So that is something new which has, come on board.
Okay, all right. And you'll have not yet started looking at the export market because domestic realizations are better, right?
Yeah, the domestic market is still at least 10 to 50% higher than the export market. So we're still selling everything domestic.
Okay, just to revise, we don't want to ask you about Q1 because post your numbers, we'll ask you a lot about that. But for this year, you were looking at pellet sales of close to 1.9 million tons with margins holding around 18 to 20%. Holding on to that guidance?
Yes, we are holding to the guidance. With the market share like this, we are confident we will achieve to, perform as per the guidance.
Got it. Also, you had planned to put up a 1 million ton steel plant, but you were pending, some approvals were pending and you were awaiting that. Have those approvals come about? Give us a, Abhishek, if you could give us a timeline and the total capex as well that you will be incurring.
Okay, so there are two approvals pending at the ministry level. One is on the pellet and the beneficiation side, mines expansion. And second one is the 1 million steel plant. So, both approvals are under process. Things have started moving finally. And we're expecting the approvals to be in hand by end of Q3 or early of Q4. So once we have the approvals in hand, we will start the groundwork.
Okay. And for the steel plant, give us a timeline. By when do you see the light of day? Because big investors are coming in. They don't want you to be just an intermediary, maybe. They want you to start producing steel. And that's the plan you've set for the next few years. So give us a timeline. By which year should we see a steel plant come on board? And also the rough capex, if you'll have a number in mind, because it will entail a few thousand crores.
Okay, so if everything is in place, we should start the groundwork based Q1 of next financial year. And from there on, you can consider 36 months. So we're looking at FY28 for the commercial production of the 1 million steel plant. And on the pellet side, the commercial production should be in place by FY27, Q1 of FY27. So that's the timeline we have set ourselves, to go ahead.
Okay, all right, Abhishek, thanks so much for stopping by and giving us that clarity. Post your Q1 numbers. We'll want further details in terms of, how the various verticals are doing. But good on you all to raise this money, and you've got an influential investor as well that's coming in there. Pellet prices as well, holding on to these levels. Good speaking to you. Well, a quick check on the markets. We continue to hold into, well in the green on the headline index. The problem is the mid-cap index. I think we should pull up the intraday chart out there. The mid-cap index has almost moved into the green. So some signs of profit taking in select stocks from the broader markets. Let's pull up the intraday chart. Also pull up the advanced decline ratio. We were talking about how only 200-300 stocks were declining. That number has moved up to close to around 1,000 now as we speak. So those numbers are getting closer to each other as well. Those lines a little bit closer to each other in the last few minutes or so. For the time being, though, we'll slip into a short break. Come back. Mitesh Thakur will be back with us. He'll be giving us his technical check. Welcome back. Well, the markets continue to hold with gains of close to around 110 points. As promised, Mitesh Thakur is back with us. Hi, Mitesh. Welcome back. First hour of trade has been good on the headline index. Where do we go from here? Would you take some money off the table on the index and also fill us in with a fresh call?
Okay, Nigel, I think I would want to be a bit greedy. And the reason of that is the fact that the bank nifty has opened the gap up and is still expanding and making new highs. The momentum in the HDFC Twins is likely to continue. In the bank nifty, I think we are now looking at targets around 45,700, 750. So there's still some more space to go. what would be a prudent way to approach the Nifty would be to trade your stop losses now at about 19,200 on the Nifty. And that's the spot level, so about 100 points lower. And hope that it head towards 19,450, 19,500 before you take some profits off. So still maintaining long bias. And on the stock side as well, Eicher Motors is something which has caught my eye early in the day. It's come off the highs, but that's a buy with a stop at about levels of 35.75 and a target of 36.80 can be looked at. And the other one is NMDC. Disclaimer, we have some positions in. That's a buy with a stop at 105.5 for targets of around 111.
Any thoughts on L&T Finance Holding, Mitesh?
Rima has run up a lot. I think, we have had some buy calls earlier on the stock. Now, I'm not sure to buy afresh because of the fact that if you look at the stock price, I think it was around 890 rupees way back in the last week of April. And since then, it's been a one-way rally. I think if somebody is holding it out, just trail your stop to about 123.5 and hold it out. But fresh entry, I think, is not what I'm very comfortable with, given the fact that it's very overbought.
Yeah, big move. March end, the stock was sub 80 rupees and now it's up more than 130. The stock price is now at 131. This month itself, it's seen a rally of about 26%. Mitesh, thank you very much for joining in. Let's get to our 10 a.m. stocks on the move. Mangalam joins in with Kansai Nerolac. Mangalam.
Well, it's a good day for Kansai Nerolac. It's up around 4% over the weekend. They made an announcement to the exchanges that there's been a slight modification in their earlier deal with the Hiranandani Group for real estate. So earlier in Jan, they had said that the plan was to sell almost 96,180 square meters of the land that the company had in Thane for about 655 crores to the Hiranandani Group itself. And now they've gone ahead and amended that by selling a little more than 900 square meters over and above the earlier deal as well for a little more money too. So now they will sell close to 97,100 square meters for about 671 crore rupees, and the deal has been signed. It's important in a competitive environment for a company like Kansai Nerolac to have some cash on its books as well. The market share is close to around, the market cap is close to around 25,000 crores with cash and liquid assets at around 550 odd crores. So this would help as the paint industry is currently, entering that highly competitive environment with large players and large capacities coming on board as well. For Kansai Nerolac, for the company itself, there are a bunch of triggers. The biggest one, of course, is the 316 crore capex that they've embarked upon, as a result of which their capacity will increase by about 1.5 lakh kiloliters per annum. And they've also commenced operations at their backward integration facility, so that should help their margins. What would further support their margins is lower raw material costs. So we've seen crude cooling off, and as a result of which all the crude derivatives have cooled off as well. And this morning we're getting auto sales numbers. Kansai Nerolac has a fair amount of their business coming in from auto paints, so that doing well should aid them further as well. And in the paint industry, it's trading at a steep discount to the other leaders as well, trading at around 26 times 2-year forward earnings. So which is why we're keeping an eye out on it.
Okay, all right. Mangalam, thanks a lot for that. So that stock buzzing in trade. Ultratech Cement as well. That's holding strong in today's trading session. They came out with their quarterly update. And for the last couple of quarters, it's good they have started this. I hope when things get a little bit jittery as well, they do continue that. But these numbers are very, very good. The consolidated numbers are up by close to around 20%. And remember, for Ultratech Cement, you have the domestic sales, which is broken up into white and grey cement. Grey cement is the largest part of their entire mix. So grey cement volumes have grown by close to around 20%. And the overall volumes as well are up by close to around 20%. Now, this is good news, which means they have outgrown the industry, which could have grown by mid-teens. They have grown at 20%, so they've clearly gained market share out there. And on that sort of base, their capacity utilization levels are at around 90%. Explain why the stock is up 1.5%. Vivek, though, joins us to tell us about Mascon Dock. Vivek?
Well, good morning. Mascon Dock, we highlighted earlier as well, a very important deal when coming in. So, what's actually happened over the weekend is that the company and the Defense Ministry actually have gone ahead and signed a deal worth over 2,220 crore. And, this particular one is an important one because, the company has gone ahead and got a deal for a submarine named INS Shankush. Now, this particular deal actually aids the strong order book that the company is already currently sitting on. Remember, at the end of March 31st, 2023, the order book was well in excess of 38,750 crore. And now, most of the analysts' eyes continue to remain on the execution. Recently, HDFC Securities too wrote a note, and they've highlighted the kind of order pipeline that the company is currently looking at. And according to them, one key trigger is going to be, the Defense Acquisition Council actually going ahead and approving the procurement of 8 corvettes, and the RFP for this particular one is expected in this particular year itself. Why is this particular, RFP important? Because the size of the contract could be worth almost 36,000 crore, and it will be split between 2 shipyards, and Mazga also has an equal chance of getting this particular order win on its books.
Okay, thank you very much for that. Get into a break. On the other side, it's our special segment. It's the economy. Lata will get chatting with Manish Raj Singhania, President of FADA, and Prakash Sivan. Stay tuned.